Stocks gain with midcaps leading the bounce after the big sell-off on Monday. Utilities and metals are the biggest gainers, even as IT and FMCG drags. Rupee recovers a bit in early trade as dollar index falls from Monday's highs, but demand for dollar pullbacks and the Indian currency to fresh lows. India's December CPI inflation comes in lower than expected at 5.2%, but bond yields continue to inch up as street fears RBI may skip a rate cut in February. HCL Tech stock sees its biggest daily decline in almost 10 years on profit booking following a big run-up after its post mostly in line Q3 numbers, but tempers its outlook. JSW Energy gains on winning the bid under the IBC's process to acquire the 3.6 gigawatt KSK Mahanadi power. The resolution is also a positive for large lenders to the ailing utility, including PFC and REC. Soon after, Adani Supermart announced a change of guard at its helm. United Spirits has said that CEO Hina Nagarajan will move to a role at Diageo, with Pepsi veteran Praveen Someshwar set to take the charge. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Markets today, as of now, have fallen a bit from the day's highest point, almost near the day's low is what we're seeing, around that day's low, near that mark. The day's low was 23,134 for the Nifty. Right now, we're at 23,147. So, yes, just holding on to gains of 0.2% in trade. Just look at it in the last few minutes. You've seen that sharper fall coming in. Now, let's wait and watch out how the second half of the trading session is going to pan out, because from the day's highest point, we've seen that bit of a fall coming in for the Nifty. Sensex, as of now, is just managing to hold on to gains of around 180 points. So that's also something that we should be watching out for. 76,480 levels is where the Sensex is at. Broader markets, which were very strong in terms of performance and outperformance, they're still outperforming the benchmark indices, but that also has come off from the day's highest point, though Nifty Midcap managing to hold on to gains of almost 1.7% in trade. Small cap also managing to hold on to gains of more than 1% in trade. Nifty Bank, let's see what that is also doing in trade. 1% gain seems like is holding on to as of now of the day's highest point. So overall, the market has come off at the day's highest point. Sectorally, when you're looking at Nifty Metal, that's the top sectoral gainer. We're seeing a buzz coming in around all the metal names. PSU banks managing to hold on to good gains. Loser-wise, we have Nifty IT that's not doing well. HCL Tech, in terms of the numbers that have come in and post that, we've seen that sharp fall for HCL Tech. So Nifty IT overall also is seeing a bit of a subduedness, down 2% in trade. And other than that, we have FMCG. That's also very subdued in trade today. Trading mainly in the negative territory is what we are watching out for in terms of the Nifty FMCG, down almost 1% at the day's lowest point. Adani stocks, keep an eye on that. They are buzzing in trade. Shipbuilder stocks, they are managing to hold on to good gains as well. So that's where some of the green is coming in from. But let's move on. And the Indian rupee, that has recovered a bit in early trade as dollar index is down from Monday's high. Now, demand for dollar pulls back the Indian currency towards fresh lows. India's December CPI inflation also comes in lower than expected at 5.2%. While overall the wholesale price index for December comes in at just 2.4%. Lata is here to decode all this for us in terms of give us details in terms of inflation numbers, what's happening to the rupee, update on that front as well. Lata, good afternoon.
Well, let me start first with the inflation number and the CPI number, because that's the index which the Reserve Bank watches to set rates. That came in, of course, yesterday at 5.2% for December, lower than the CNBC-TV18 poll of 5.3, lower than the November 5.48. So a good number on the whole, largely pulled down by core CPI, which has fallen to 3.6 from 3.7 in the previous month. The one that didn't move as low as people would like, food inflation, 8.39 was what we got. Our poll said 8.3. Of course, it's lower than the November 9.04, but not low enough. Vegetable prices, of course, were the ones that has really helped in pulling down food. They've declined sharply, but they still remain high at about 26% up year on year. But again, it's a 4-month low. The cereals and eggs and fruit also were slightly higher, which was a bit disturbing. But vegetables are expected to decline sharply in January. We have some nowcast numbers for tomatoes, onions and potatoes, and that looks like we're going to see the inflation falling a goodish bit. Very quickly on the WPI wholesale price front, that has never been a big bother. It has been around the 2-3% mark, but it's come in at 2.37, in line with what our poll said. Food and wholesale index also has fallen, not as much as we would like, 8.5%, still looks high, but it is a 4-month low. And it's the manufacturing inflation, or core WPI, which is really low, 0.7%. I mean, prices have hardly moved on the manufacturing sector at the wholesale level. So what does all this mean for rates? Now, there is a growing section in the market which believes that there is space for a Reserve Bank rate cut in February, because core WPI and core CPI are way below the 4% mark of the Reserve Bank. I guess much will depend on how the currency markets behave in the first week of February, whether they give some consolation to the Reserve Bank that the worst of depreciation is over. Well, with that, let me come to the rupee. The currency was expected to appreciate today after a terrible Monday that it had when it fell, had the sharpest fall in 2 years. The expectation that it would do well was because the dollar index overnight had fallen from 110 to 109.6 on some talk that Trump may not rush all the tariffs but would do it gradually. The rupee has appreciated, but it is still appreciated less than the other EM currencies. They were appreciated between 0.2 and 0.5%. We've appreciated just 0.02. And at one point, the rupee lost all its gains and even touched a new low of 86.60. But it's about that range. The expert opinion that we have got is from Goldman Sachs. Their belief is that this is going to be a dollar strength year. Stronger for longer is what they think you will get in terms of the dollar. And that the rupee needs to fall more. It will probably move towards the 88 mark, but it will still outperform all other or most other emerging market currencies. Maybe you want to hear out Kamakshi Trivedi, the Goldman Sachs FX expert.
What you're seeing now is a little bit of a release of the very tight management of the rupee that you've seen. I think that's part of why you're seeing the weakness. And I also think, India itself is having a little bit of a cyclical slowdown. If you think about the rupee in comparison to the dollar, where, as I just mentioned, you're seeing kind of pretty exceptional growth, it makes sense that you see a bit more weakness in the rupee. But I do think that, ultimately, as we look across the year, relative to other Asian currencies, the rupee will still be an outperformer, but I think there's more weakness to come versus the dollar. We think the dollar is going to be stronger for longer. We have just marked our forecasts in that direction. We think there's another 4-5% upside still to the broad dollar trade weighted index. So, this is a combination of continued firm U.S. growth, U.S. exceptionalism, and, shifts that are occurring on the rate side, but also tariffs. Tariffs are coming, and I think that's a key part of our view of dollar upside from here.
And amid the weakening of the rupee, the governments also say that US sanctions on Russian oil will not have a big impact on Indian currency. Now, government sources point to the large dollar reserves as a hedge against further depreciation in the rupee. They also point out that a weak rupee will help exports, bringing in more dollars to the coffers, while the growing renewable sector will reduce the country's dependency on oil. Also, let's bring you a crude check now. And crude prices have stabilized today after jumping on the back of the tougher US sanctions against the Russian oil tankers and a strong dollar in the last two trading sessions. Now, Brent crude fell nearly 0.5% to reach around 80.53 dollars per barrel is what we saw, while WTI crude oil fell around 0.4% to reach around the $78 per barrel mark as well. So interesting to watch out for crude moves going forward in terms of trade. But in fact, my colleague Sapna joins us to tell us more about how the government is preparing itself to safeguard against the sanctions. Sapna?
Yeah, hi. So basically the sense that we have gathered is that at least, in the upcoming 6 to 8 weeks, the disruption that will be caused by the U.S. sanctions against the Russian, ships and freights and stuff, that's not really going to be felt, simply because, there is going to be a small window for people to come up with new arrangements. Plus, the government has also indicated very clearly that the cargoes which have already set sail, those supplies are definitely going to be received. Of course, any of these sanctioned entities, be it oil major or be it any of the ships, post 10 Jan, those supplies will not be taken by India, of course. So in this limited period of around 6 to 8 weeks, some new arrangements, some new equilibrium is likely. Refiners are also looking at the market very closely. So your supply terms can be renewed. It can be or negotiated. It can be Middle East. It can be Brazil, Mexico, Venezuela. There will be two factors that, of course, the refiners will watch out for: the pricing of the oil supply as well as the kind of crude that you want to take. So these are the factors. So 6 to 8 weeks is what is there to watch out for. Of course, in the long term, nobody is ruling out a disruption. That's what even government is gearing up for. That definitely there will be disruption. But the 6 to 8 weeks of window needs to be watched closely. Second point is that we also have a stake of our own government-owned oil cores in the Vostok oil project of Russia. So that is also something that needs to be studied. Government is going to look at it in terms of what's going to be the impact.
Okay, Sapna, thank you so much for the latest update coming in there. But on that note, we're going to slip into a very short break. After the break, we'll focus on HCL Tech, what the numbers were looking like, because the stock has seen its biggest daily decline in almost 10 years. So we'll get you more details on HCL Tech after this break. Welcome back to Business Lunch on CNBC-TV18, and now let's talk about HCL Tech and onto those earnings, because seeing its biggest day fall is what the stock is doing right now in 10 years. After reporting the third quarter numbers, constant currency revenue growth came in just at 3.8% versus expectations of 4.1%. Margins also rose by 90 basis points, but there was no change to the midpoint of the organic growth guidance for the year, which is something that disappointed the street. The management, however, tells CNBC-TV18 that they expect Q4 margins to be slightly lower than the Q3. Now, on that note, also let's listen in to what they had to say.
I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of the December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year.
Impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
Okay, now let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th, and this was to share their valuable insights and strategies. Here's a snippet of what pro trader Aditya Pachwaria, the co-founder of Fintoric Capital, had to say about limiting your risk while trading. Listen in.
मेरा पर्सनल रिकमेंडेशन रहता है कि आप अपना ग्रॉस एक्सपोजर लिमिट कर दो. इन अदर वर्ड्स आप अपना लेवरेज लिमिट कर दो. इंस्टेड ऑफ आप हेज लेने के बजाय अपना लॉट साइज को आप आधा, मतलब 3,25,000 पे एक लॉट चलाओ आप, इंस्टेड ऑफ 75,000 पे एक लॉट चलाने के बजाय. और जैसे जैसे आपका लॉस आ जाए, आप 5% लॉस हुआ तो उसके बाद आप 3,25,000 के बाद आप 2.5 लाख पे आ जाओ, आप 2 लाख पे आ जाओ, और 5% और लॉस हुआ. इस तरह से आप धीरे धीरे अपना एक्सपोजर बढ़ाते जाओ, क्योंकि अल्टीमेटली मार्केट जब ऊपर जाएगा आप इकट्ठा रिटर्न पूरा सबका निकाल दोगे उनसे भी। प्लस आपको म्यूचुअल फंड्स, एफडीआर का रिटर्न आ भी रहा है, तो आप 6% अगर एफडीज में भी इन्वेस्ट करते हो, फिर ये ऑप्शंस करते हो, तो आप अपना वैसे ही 7-8% तक का तो ड्रॉ आप ऐसे ही ले सकते हो, तो भी आप अपना साल के एंड में 0 पे ही छूटोगे।
Okay, let's move on, and just a quick highlight coming in on Concor, because they have come out with a 9-month FY25 business update that we're seeing coming in. Exim volumes have come in at 5%, and like you can see flashing on the screens as well, it seems like they've all remained much below the guidance of FY25. As of now, the stock is trading with gains of 3.5%, but yes, do keep an eye out on Concor. We're seeing overall domestic volumes also seeing a growth of around 18%, total volumes up by 7.8% versus guidance, something that is below. That's what we're seeing flashing on the ticker as well. But on that note, we're going to slip into a very short break. When we return, we'll get you the latest from a Mahakumbh Mela. Lakhs of devotees take their first holy dip. Welcome back, and thanks for staying tuned into Business Lunch on CNBC-TV18. Now, actor and entrepreneur Abhishek Bachchan has invested in ICC-sanctioned European T20 League, expanding his portfolio of a sports investment. Speaking to Shireen Ban, he describes his journey into sports and entertainment ventures, his passion for cricket, and what lies ahead in his journey as a sports entrepreneur. Listen in.
Let me go back in time, because we had this conversation 10 years ago when you had just invested in the Kabaddi League. And then, of course, football happened. And when I asked you then about this journey to becoming an entrepreneur, you said it was more of a hobby. 10 years on, and 10 years for Kabaddi and 10 years for football, and now cricket. It's no longer a hobby, is it?
No. Thankfully. It is becoming a bit of an expensive hobby. Maybe the next time we sit down, we can talk about the legacy that ETPL has left behind. And hey, you know, Abhishek, you were part of that and you made a difference. I want that to be part of my story, that, you know, you made a difference. As all Indians, we're all cricket fans.
Yes.
And I think the gold standard in sports and sports entrepreneurship in India is still, I think, cricket. The dream was always to be involved. I had certain criteria when I first started working in sports. Those criteria, some of them have been achieved. And now I felt that I was ready for the next big leap, which is cricket. I wasn't sure when I started with Kabaddi in the Pro Kabaddi League and ISL with Chennai and FC, whether I could contribute anything to cricket. First of all, my cricketing knowledge may not be as good as some of the pundits. And I felt cricket already is an established and set up sport in and around India. And yes, there's always room for improvement, but I think we're at the top of our game over there. I didn't know what I could bring to the table. Last year, you know, my father and I invested in the ISPL and took the Mumbai franchise, which is the Street Premier League. That was my, you know, litmus test, testing the waters of cricket. And after that experience, I feel, okay, now I was ready to take the next big leap. And that is when the ETPL came about. And we started discussing it. And I felt prepared to be able to, you know, do something with it. Then came the question of, you know, how you want to get into it. With the ISPL, which is a very exciting new format of cricket, which is street gully cricket, tennis ball cricket.
Yeah.
And we all thought it's going to be very playful, but it's actually immensely competitive. And the players are fantastic. And I really enjoyed that experience of running the, you know, help run the Mumbai team with our partners. I felt if we had to do something with the big leagues, then you need to, are you able to compete with the best team owners in the world? I think the IPL has set the standard for how teams should be run. And I think they do a great job.
Yeah.
I'm not sure whether I wanted to get into that equation.
Why not?
I want some more time before I can do that. The ISPL, I'm good at running a team. I'm thankfully, by the grace of God, I'm good at not losing money with my teams. But cricket is far more complicated than, say, kabaddi or football or street Premier League. There are a lot more variables involved, and you're playing with the big boys then.
And it's bigger money.
Yes, it is. The opportunity presented itself to become part of the ownership group of the league.
Yeah.
That's where the excitement came into me, because it was not going to be in India. We're doing it in Europe.
Yeah.
Here was an opportunity to bring T20 entertainment and cricket
To Europe.
to a market which doesn't have that already, in a sense. I mean, yes, England does,
Yeah.
but Scotland, Netherlands, and Ireland perhaps don't to that scale. We have a few players that play here and there. So the first criteria was, can I make a difference? And I feel these are markets where I can make a difference. And if I can make a difference with the ownership of the league, then I felt that was the one big leap that I needed to take, as opposed to just being a team owner.
Okay, and now bringing you some national news updates. The second day of Mahakumbh Mela saw millions of devotees converge at the Triveni Sangam before sunrise to take the holy dip on the occasion of Makar Sankranti today. This marks the first Amrit Snan of the Mahakumbh 2025. For the event this year, the Yogi Adityanath-led government has initiated 549 projects, from infrastructure development to sanitation, at the budget of 6,990 crore rupees. And with that, it's a wrap on this edition of Business Lunch on CNBC-TV18. We leave you with some visuals from both North and South India, where many are celebrating the harvest festival of Makar Sankranti and Pongal, which is marked by the traditional bullfight. Thank you for tuning in to the channel on CNBC-TV18 and Business Lunch. Up next, you have Midcap Radar.